You're sitting across from a bank rep. Nice office, nice smile, clipboard in hand. And they ask you that question. So, what's your annual income? And you just tell them. Of course you do. Why wouldn't you? It feels like the right thing to do. Honest, cooperative, like a good financial citizen. But what if that single moment, that reflex, is costing you more than you realize? My name's Robert, and I spend way too much time thinking about how banks actually work, the invisible power dynamics behind everyday banking decisions, and why so many people hand over information that quietly gets used against them. I've been deep in this for years, and I can tell you, there's a pattern most people completely miss, and once you see it, you genuinely cannot unsee it. If you're someone who wants to understand how banks actually operate beneath the surface, not the brochure version, the real version, make sure to hit that subscribe button and give this video a thumbs up if it ends up changing the way you think about your next conversation with a financial institution. So let's start with something uncomfortable. When you walk into a bank, you probably think of it as a neutral place, a service provider. They hold your money, you use their products, everyone's happy. And that's basically how banks want you to feel, because a customer who feels like they're in a partnership doesn't ask too many questions. But here's the thing. Banks are not neutral. They are at their core data collection machines that happen to offer financial products. And every single interaction you have with them, every form you fill out, every question you answer, every number you casually disclose becomes a data point in a profile that determines how they'll treat you, what they'll offer you, and critically, what they'll charge you. When you're just trying to open an account or get a loan, you're thinking about the immediate transaction. You want the thing, they have the thing, so you give them what they ask for. That's survival mode thinking. Just get through the interaction, answer the questions, move on. And honestly, most of us have been operating this way since our very first bank account. Nobody sat us down and explained that this was negotiation. Nobody told us that information is leverage. The psychological state I'm describing, this automatic compliance, it's not your fault. It's literally designed into the experience, the formal setting, the professional language, the sense that they're doing you a favor by considering your application. It creates a dynamic where you feel like the supplicant and they're the authority, and in that state, you give up everything. But here's where it gets really interesting. The moment you understand why they want that information, everything changes. Here's what banks are actually doing when they ask for your income. They're not just verifying you can repay a loan. That's the surface-level explanation, and it's true as far as it goes. But the deeper function, the one nobody in that nice office is going to explain to you, is that your income disclosure helps them figure out the maximum they can extract from you. Think about that for a second. If you walk in and tell a bank you make $120,000 a year, you've just told them your ceiling. You've handed them the upper boundary of what you might be willing to pay for a product, what interest rate you'll probably accept without pushing back, what credit limit will feel aspirational rather than insulting. You've essentially walked into a negotiation and opened by showing your cards. Banks use income data to price products, not just to qualify you, but to calibrate their offer to what the data suggests you'll accept. High earners get offered premium products with premium fees, framed as exclusive access. Lower earners get steered toward products with higher interest rates, framed as the best available option. In both directions, your disclosed income is shaping what they think they can get away with charging you. Now you might be thinking, okay, but don't they need my income to process a loan application? And yes, for certain regulated products like mortgages, there are legal verification requirements. I'm not telling you to commit fraud or lie on federal applications. That's not the point. The point is that people dramatically over-disclose in contexts where disclosure isn't legally required, out of habit and social conditioning. And that habit has a cost. Here's what this looks like in real life. Let's say you walk into a bank to open a new checking account or explore a credit card offer. The rep asks about your income. You say $85,000. They now know your bracket. They know which tier of products to steer you towards, which fees you're statistically likely to absorb without complaint, and what kind of marketing language will resonate with you. Now imagine you'd said,
I'd prefer not to share that for a product that doesn't require income verification. Can we talk about the product terms instead? Suddenly, the dynamic shifts. You're no longer a data point being sorted. You're a customer who knows how this works. And banks, interestingly, respond differently to people who demonstrate financial awareness, because those customers are more likely to push back, more likely to compare offers, more likely to walk away. So they get treated more carefully. The option to not disclose, just having it and using it, changes your position entirely. You go from someone being processed to someone being courted. And here's what's really wild. You don't have to be wealthy for this to work. You just have to understand that the question is optional more often than you've been led to believe. And the math on this compounds in ways that genuinely surprised me when I first looked at it. Think about the accumulation of small financial disadvantages, a slightly higher interest rate on a credit card because your income profile flagged you as price insensitive, a checking account with fees that a better negotiated relationship would have waived, a loan offer that was 0.5% higher than what they'd have offered someone who pushed back. Individually, these feel minor. Over 5 years, 10 years, you're looking at thousands of dollars in aggregate that you paid not because you had to, but because a single reflex answer in a bank office set the terms. The acceleration works in reverse, too. Once you start approaching these interactions with awareness, asking which pieces of information are actually required versus just requested, pushing back on initial offers, treating the conversation as a negotiation rather than a processing queue, you start capturing those advantages consistently. And consistently captured small advantages are how the gap between people who feel financially squeezed and people who feel financially comfortable actually gets built. It's not always dramatic, it's often just dozens of small conversations handled differently over years.
Now, here's the trap that catches people even after they understand this. The temptation is to think that being guarded with banks is about being combative, or that it signals something negative about your finances. And banks, brilliantly, have cultivated exactly this anxiety. The feeling that if you don't fully cooperate, they'll assume the worst, that transparency is a signal of good faith, and withholding is suspicious. But think about what you're actually trading off. Your income is personal information. It shapes every offer they make you. And the social norm of just answering, the politeness instinct, is worth billions to financial institutions because it removes friction from a process that would otherwise involve actual negotiation. Are you really telling me that the company who will make thousands of dollars in interest off your loan is owed a detailed accounting of your personal finances beyond what's legally required? Because that's the implicit assumption operating every time someone reflexively answers the income question without a second thought. The enemy here isn't your local bank rep. They're just doing their job. The enemy is the system that trained you to see information disclosure as cooperation, and cooperation as your default setting in financial conversations. Here's what shifts when you internalize this. You stop experiencing bank interactions as something that happens to you and start experiencing them as something you navigate strategically. You start asking questions back. Is that required for this application? What's the basis for this rate? What would it take to waive that fee? Small questions, not aggressive, not paranoid, just engaged. And engaged customers get different outcomes. The mental bandwidth this frees up is real, by the way. When you're not automatically deferring, you're not spending energy afterward wondering if you got a fair deal. You know you asked. You know what the terms were based on. That shift from passive to active changes how you show up in financial conversations across the board. And honestly, that's where the real compounding happens, not in any single transaction, but in the identity of someone who treats financial conversations as negotiations rather than procedures. Look, none of this happens overnight. Changing a deeply conditioned reflex, the automatic answer to a simple question, takes practice and repetition. You'll probably still feel the social pull to just answer the next time someone in a professional setting asks. That's normal. That impulse was installed early and reinforced constantly. But here's what I want you to sit with.
Every financial institution you'll ever interact with has people whose entire job is to understand how to structure conversations to maximize what you disclose and minimize what they concede. You are not required to make that job easier than it already is. Your future self, the one who has had dozens of financial conversations, who has pushed back where pushing back was warranted, who has stopped treating "they asked" as a sufficient reason to answer, that person is going to look back at this moment and either feel grateful that something clicked or wonder why it took so long. Start asking which questions are actually required. Start treating your financial information as what it is, leverage, rather than as something you owe to anyone who asks nicely. Not because some person on the internet told you to, but because you finally understand the game well enough to play it differently. Trust me, your future self will thank you for it.